Hi, this is Darshan Bhatt from Glovista Investments with a market outlook for the week beginning June 14th. This past week, the macroeconomic calendar further reiterated the uptick in global growth dynamics as well as the leadership in economic momentum out of Europe. For example, the industrial production data out of Spain and Italy significantly surprised positively, as well as the trade data out of Taiwan came in stronger than expected both on the exports and imports fronts, which bodes well for a continued acceleration in global growth. Meanwhile, in the US, the May core CPI indicator came in higher than expected, increasing 3.8% on a year over year basis. Though any inflation related dynamics from such a release were faded by the bond markets, with the US 10-year yields moving lower by close to 10 basis points for the week to 1.45%, driven by the recent deceleration in commodity prices, including lumber prices, and an increasing belief that over the near term we have seen a peak in inflation momentum. Though this Friday's University of Michigan sentiment release came in stronger than consensus expectations, the inflation indicators over the next 1 year and 5 year continued to edge lower. So the consumers are expecting that the inflation momentum has topped out over the near term, and the bond markets are taking comfort in it. This past week, we also saw the ECB meeting where they revised upwards their growth estimates for this year from 4% to 4.6%, and for next year from 4.1% to 4.7%, while only moderately increasing their inflation estimates. In addition, Madam Lagarde continued her commitment to providing abundant liquidity up until March 2022. Given all these dynamics, the impact on the risk indices was no doubt positive, with the S&P 500 index increasing by 0.41% for the week and closing at all-time highs, and the Nasdaq index rising by 1.65%. Given the move down in bond yields, the growth-oriented sectors and industries outperformed their value peers for the week. Over the medium term, we continue to like equities as an asset class and value and cyclical-oriented sectors and markets, including US financials, materials, industrials, emerging market equities, and select US large-cap growth stocks. From a macroeconomic calendar perspective, this week the focus will be on the US FOMC meeting, as well as several releases, including industrial production, the June Philly Fed and Empire Manufacturing, retail sales and housing starts out of the US, as well as May retail sales and industrial production out of China, and April core machinery orders and May CPI out of Japan. Thank you for listening, and we wish you a wonderful week.